Ash, aka Cryptos, here with a little Bitcoin update in 2020, December. What's going on with Bitcoin? As you can see on the charts here, there's definitely some logarithmic activity happening or exponential activity. Bitcoin seems to be going parabolic. What's driving that? What's going on with the prices? Like, Bitcoin doesn't seem to be a big deal right now with the retail investors anyway. You don't see Bitcoin mania yet. There's not people tweeting about it or creating a lot of news about it in the retail space. So what's going on with Bitcoin? So it's actually the institutional space that Bitcoin's hot right now. So as you can see, PayPal earlier last month, PayPal allowed people in the United States to buy Bitcoin directly using their PayPal account. Buy, sell, and trade. It's really amazing. And Square also has been buying up Bitcoin. I believe they bought $50 million in Bitcoin shortly back, probably back when it was around $10,000 per Bitcoin. So they're doing really good with their investment. Institutional investors are getting it. And as you can see from this report here, PayPal and Square are buying every single Bitcoin that's being mined. So basically that's creating a problem with the supply. If there's not enough Bitcoin to go around, what's going to happen to the price of Bitcoin? Logically, it's going to go up. You've also got people like Paul Tudor Jones here, billionaires, that are deciding to take the advice to invest 1 to 5% of their total net worth in Bitcoin or some other crypto asset like Ethereum. A lot of them are taking that very seriously and have been, there's been very many Bitcoin billionaires this year, well, I should say billionaire investors who are buying Bitcoin. So obviously since they're scooping it up, it's creating no low supply in the market. We also take a look at the Elliott wave theory here. You can see the Elliott wave theory has predictions based on the price peak, at $1,000 and subsequent crash to 146. Then a peak again at around $20,000 and subsequent crash to about $3,000. What's the next peak? Elliott wave theory estimates around $82,000 for the next Bitcoin. So yeah, there's traders looking at this too. There's investors. There's really smart people looking at this and going, yeah, that logically makes sense. Is it going to go to zero? Unlikely. It looks highly probable that Bitcoin is going to have a peak around $80,000 or so, based on Elliott wave. Then we also have the stock to flow model that's been around for years, and you can see Bitcoin loosely following the stock to flow model. This is a logarithmic chart. It shows Bitcoin basically doing its thing, mathematically doing its thing. As supply gets cut from the halvenings, it has an explosion of price. And that happens every time Bitcoin has a halvening and gets cut in half, every 4 years. So now Bitcoin was just recently, the halvening recently happened back in earlier 2020. Now the next price range is around $89,000, $82,000 so far. According to the stock to flow model. And normally what happens is you can see there's peaks that happen here, even in the stock to flow model. So we could have Bitcoin peaking out over, the stock to flow prediction model of $86,000. That's likely where it'll float around actually in the coming 2022 to 2023 to 2024 years. It's going to be floating around $80,000 per Bitcoin. Pretty crazy stuff. Why would it get that crazy valuation too? Sure, supply is definitely an issue due to billionaires and institutions scooping up lots of Bitcoin and sitting on it, taking it out of the market so it's not being traded. So if people want to buy Bitcoin, the price gets up higher. Why too? The US dollar. The US dollar is looking to plunge 20% in 2021 on vaccine rollout. So yeah, last time, pretty much every time you take a look at the US dollar, when it loses strength, Bitcoin does a pump. And we're in a perfect situation, perfect storm right now, with all these people buying up Bitcoin and the US dollar being so strong, right? And we're going to see as the COVID vaccines roll out, that people are going to be taking their, the value of the US dollar is going to be dropping in value up to 20%, which is unprecedented. There's never been a 20% drop in the US dollar in a year before. And I think that largely has to do with the amount of currency that was created in 2021. Approximately 18 to 20% of the amount of US dollars that are in circulation were created this year in response to the coronavirus. That's kind of trying to save the industries, pumping up the stock market, is kicking the can farther down the road, though, because that money actually we have to pay for it somehow, and we're going to pay through inflation, or decreasing the buying power of the dollar. So we're going to see a lot of money flowing out of the U.S. markets into emerging markets, such as Asian markets and African, European markets. The money is going to flow into those markets, which is great for those countries, but not good for the U.S. dollar. Since the U.S. dollar will dump so much, we will see a corresponding rise of Bitcoin, because there will be money pumping into Bitcoin too at the same time. Yeah, okay, there's some really crazy news articles out there. You can see this one from Bloomberg Wealth. Bitcoin revival unleashes animal spirits in a $300,000 forecast. This actually came from a Citibank analyst. So we're getting banks who used to be really anti-Bitcoin and anti-crypto now coming up with their own trading desks with crypto, recommending that the people that they invest 1 to 5% of their portfolio's net worth into cryptocurrency Bitcoin to be able to have a hedge against conventional markets, as well as any. If you look at the math, if you go historically, if somebody invested 1 to 5% of their net worth into Bitcoin a couple of years ago, they would have a lot higher performance, up to 30% higher performance of a portfolio. So it's a good, smart thing to do. That's what a lot of billionaires are doing right now, buying Bitcoin. So this Citibank analyst actually took a look at the gold markets and saw that Bitcoin is looked at as like the new gold. For the millennials and the newer generations that are coming out, they're not in a race to buy stocks. They're not big on bonds. A lot of that stuff doesn't make sense to them. And those markets are so mature now, they feel like they've missed out on it, which they really have. But Bitcoin is the new hot thing on the market. And it's something that they understand too. They understand Bitcoin easier than they can understand buying gold. Buying gold doesn't really make sense to them. Now they have a whole bunch of precious metal laying around. What are they going to do with it? Stick it in a safety deposit box. Maybe you could do that. It does make sense to diversify, but you certainly should diversify into some cryptocurrencies, because they're really easy to store. You can literally take Bitcoin and stick it on a piece of paper and make a couple copies of that. Put one in a safety deposit box, one in your safe, one in safekeeping place in your house, whatever you like. And it'll sit there, and nobody knows about it because it's just slips of paper. So you can't do that with gold or really any other assets. Yeah, so let's take a look at like the next 5 years. If you take a look at this one, this is actually Bitcoin versus US dollar. Yeah, price. You look at the charts. It shows the peak prices, and if you do the correlation and on the charts, you can see that the price target's sitting around $300,000 per Bitcoin. In the next, few years, we're talking about 3 years. Yeah, eventually Bitcoin going to $1 million per Bitcoin on the stock to flow model, which is really mind blowing. But hey guys, like, Bitcoin is a mathematical entity. It's following algorithms. These algorithms are designed to increase its value over time, and it looks like it's happening. So, a wise man would say the best time to buy Bitcoin would have been, 10 years ago. The second best time is now. So if you don't have any Bitcoin, you might want to consider buying a little bit and sitting on it. It could work out really well for you. Of course, this isn't trading advice or investment advice. I'm not a professional trader and investor. So please do your own diligence and make your own decisions about what you want to do with your future. All the best.